we're on the right path. Emissions are coming down, and folks, maybe, just maybe 2025 will be peak, or we would have hit peak in 2024. Let's see. But we are on the right trajectory. Every year, Bloomberg NEF puts out the new energy outlook. Now, this is our flagship publication. I invite you to scan the QR code if you've not had a look at it before. It is where we detail out our energy and climate scenarios to 2050 on a techno-economic basis, what we call the economic transition scenario, and our net zero scenario. Now, that economic transition scenario, if we just do all the things we should do based on cost basis and what makes economical sense, we're on a good track. We're going to see emissions actually coming down, and a large force of that is electrification. Each country will have a different trajectory, though. That has to do with the power system that each region or each country is starting with at the end of the day. But when we start to model that and look at that 2050 scenario and outlook, clean power, clean energy really does take a strong hold in all of it. But the energy transition isn't necessarily neat across all countries. Really important economies of India, Southeast Asia will potentially still see emissions grow up, or at least that's the trajectory of it. Other places like the Middle East, Latin America, Brazil, probably seeing their emissions plateau, but it's the large, more developed economies, China, Europe, the US, where we are expecting to see that emissions reduction trajectory. So good. If we, what's underpinning that is the outlook for fossil fuels. Coal's coming down. Oil's expected to see peak in our economic transition scenario in 2032. It's gas, natural gas, consumption of natural gas that kind of swings the scenario a little bit and kind of goes up and down depending on various variables. So one of the key things that's actually showing an increase in gas consumption is its need to power a very, 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 very hungry industry of data centers and the boom of AI. Power demand in our modeling is expected to grow 75% by 2050. A lot of that comes down to EVs, air conditioning, and data centers. Air conditioning is something we're very familiar with here in this part of the world, although I don't mind if my internet goes down, but I do mind if my AC goes off, really. 3 hugely important growth drivers with regards to power demand. And it is, so let's talk about that growth from data centers itself. You can see that really big chunk of China, that really big US chunk. If all electricity for data centers in the world, if data centers were a country, they would actually be the 4th largest power consumer after China, the US, and India. Now that's a tremendous amount. Power demand, electricity demand from data centers will equal about 4.5% of total global power demand by 2035, and that can go up to more than 8% by 2050. Staggering numbers. EVs, if you see in the previous slide, will still be higher than the demand for data centers, or at least the electricity for charging infrastructure, but it's a lot more nuanced depending on the market. So if you look at the US, the share of power that goes into powering data centers is much higher, but that's because EV rollout has been a little sluggish, to say the least, in the US. So it's a much bigger share. You look at China, the red line on the right-hand chart, it's lower, it's at 3%, but it is the 2nd largest amount of data center demand. I'll turn your attention to the very light purple line there. That's actually Southeast Asia. You'll see a little nip in the 2030 part there. That's actually just reflecting the very strong pipeline of data center growth that we have in this part of the world, particularly that triangle of Singapore, Malaysia, Indonesia. So a nuanced story with regards to power demand needed to fuel data centers. The sobering fact is, though, yes, we will need a lot of solar plus batteries, renewables plus batteries capacity to be added in order to meet all of this data center demand, this demand that's coming from our AI models getting just so much more complicated. It's going to be more than half of the capacity that we need to add. But the generation, the actual power generation that's going to feed all these data centers in the next 10 years, more than 60% of it is going to come from fossil fuels. And in even some cases, our modeling is showing that coal plants are being extended, the life of coal plants are getting extended in order to meet this increase in power demand. So when I think about the forces driving Asia's energy transition, we think about all the technology that we know, what we're already investing in, and where we can actually drive some immediate change to put us on the right trajectory. But it's absolutely key and fundamental to understand what are the drivers behind power demand growth, because that's where all the business leaders here today, all the choices that you make today, and including the influencers who are watching in the live stream, the choices made can actually influence what that emissions trajectory and energy transition is going to look like. I'll take a cue from my colleague who handles our US power market analysis, and you can imagine all the hyperscalers keep bombarding her with questions. Are data centers going to increase emissions? Well, it depends. It really depends on the choices made. You can connect to an existing grid in Virginia and cluster around there, but land is expensive and it is a gas-heavy power system there. You add more data centers there, you're going to burn more gas. Or you can locate your data center in an area of Texas which sees a lot of renewables actually getting curtailed and use it to fuel that. So it's about the choices we make that can impact the energy transition. I'll leave everybody with this image. I say giggling, yes. So not an uncommon sight for us in Southeast Asia, for those of us who come from the region and call this place home. But this is what happens when you don't plan properly. This is what happens when everybody starts adding an air conditioning unit, starts adding more computers, and you start adding more and more power lines. Understanding and mapping the drivers behind power demand growth will hopefully allow us to plan a bit better, be a bit smarter about our choices so that we don't have to have all our residential neighborhoods looking like this. Folks, thank you so much. Slides are available to BNEF subscribers and those on the Bloomberg terminal. Reach out to me if you have any questions. Thank you so much. I hope you enjoy the rest of the session. Thank you.
Please welcome to the stage Colin Chen, Head of Sustainable Finance for Asia Pacific in the Asian Investment Banking Division of MUFG Bank, for a conversation with Bloomberg's Ishika Mukherjee.
I'm sure Fauzia's presentation woke everyone up after lunch. At least that image would have if the presentation didn't do it. Thanks so much, Colin, for joining me on stage. As Japan's largest financial group, MUFG, I can safely say, has its fingers in almost every pie in Asia's energy transition, from renewable energy financing to the just energy transition partnerships and the early retirement of coal-fired power plants.
Sure.
And you've raised a good amount of sustainable finance since 2019, about $250 billion. You've done this job for 4 years plus now. What's keeping you up at night currently?
Yeah, thank you for that question. When you get to my advanced age, many things keep me up at night. But I suspect that you're asking me more in relation to what I do.
No.
And well, I can safely say trajectories. What trajectory are we on in terms of approaching our net zero targets? What trajectory are all the countries in APAC on? and what we are doing in terms of approaching these things. So from what I think about on a daily basis or nightly basis is, are we doing enough, right? And are the governments enabling us to do enough? And if we don't do enough, what happens? So the trajectories are important. They vary from year to year and from administration to administration. I won't mention which country. But it does affect us, and it does affect how we approach these issues.
Speaking of administrations, of course, the US, tariffs, the deal with Japan, all of that, the impact it will have on interest rates, right?
Right.
Are you seeing the clarity around deals in the region with the US and potentially the chance that we could have lower interest rates over the next 12 months, improving the bankability of any projects in the clean energy sector in this part of the world?
Yeah, so we see deals being announced almost on a daily basis, and sometimes twice a day. So the answer is, I hear a lot about these deals. I see the broad headlines. But when I go into the details, they're a little bit more unclear. So I think on two aspects. At least the governments have got some direction in terms of reaching deals with the US government. Let's not forget they drive a lot of trade issues. But the problem is, will these deals continue? As we suspect, as we fear. Sometimes they change, and they might change tomorrow, or the negotiators have not realized that somebody meant something else. But the other aspect of your question is whether they would lead to more deals. Deals are, especially in APAC, are driven by several factors. Obviously, one is clearly the interest rates that will make the deals doable. But also, it also is driven by demand. And demand from the individual governments are different from country to country. Asia is not one sort of a anonymous mass. It is several countries. And I mean, two of them, China and India, represents like a quarter of the world. So they have a significant impact on what these deals get done. I think that deals being done purely on the basis of cheaper interest rates are not a good way of doing them. They should be driven by demand. They should be driven by the need to do these deals. So I think while we can get a flurry of deals, overall, on a larger scale, we will see the continued sort of a take-up of more sustainable deals coming forward.
So you're saying that the impact of tariffs and deals or lack thereof hasn't really changed the outlook for a lot of the clean energy related companies in the region yet? Or?
I think they have in a certain aspect. So if we look on a long-term basis, they will not have, because the countries and the desires of their aims are long-term. They last more than 4 years, as an example. And that would mean that people need to be concerned about the next administration, if that's what they're concerned about. And then the other one that's coming up, because infrastructure deals take a long time to build. You looked at that bird's nest of wires earlier. I mean, that was a matter of, like you said, not planning. People just had demand build up. I'll put a couple extra wires. But if you do that, then you will get that bird's nest, and that is not a sustainable sort of a scenario you're looking at. So they do need planning. Governments in Asia plan for a long time. I mean, the turnover, maybe except for a few countries, for governments is not so high. And that means that we can get a decent sort of a road forward.
What about that US fund, the $550 billion one, that Japan has decided upon with the US? Is MUFG going to participate in any way in that?
I think MUFG looks at all these funds in the same way, right? They support the national agenda and perspective.
Yeah.
And in this case, it's the Japanese government perspective. So we will support them. But how we support them is still being decided, and whether it's through cash or through support in terms of doing more of the agenda, that is still being decided.
I see. I want to turn your attention to JetP now.
Oh, my favorite.
So, of course, we all know 35 billion combined between Indonesia and Vietnam that was pledged by the US, Germany, Japan, and other countries.
Sure.
The portfolio website of the JetP in Indonesia says that $1.2 billion has been approved in JetP financing.
Right.
Can you tell me what the new reality is of JetP in Indonesia now? Because I think everyone's waiting for big bang numbers to come out of it, and we haven't really seen that yet.
Yeah. Okay, so I think for those in the audience who don't know, JetP stands for Just Energy Transition Partnership. And while most people focus almost entirely on the energy transition part, it's very important that everybody understands that the just part is equally important, or if not more important. And I will give you an example. If you look at part of the agenda on JetP, so there are two JetPs in Asia at the moment. One is for Indonesia, that was originally led by the US and Japan, and now it's by Germany and Japan. And the other one is by the UK, European Union, and Japan. So Japan figures quite prominently in both. When we decide on financing a transition project, so that could be transitioning from fossil fuel, right? So that's one of the criteria, one of the aims of JetP. We need to understand that it's just not shutting down the power station. If you ask a person sitting in Europe, they said the fastest way to decarbonize is just shut everything down. But it doesn't work that way because there are people involved in the plants. Very importantly, there's availability of power. So the just part is in order to design the program where you not only shut down and achieve your decarbonization, but you have a fair outcome for the people on the ground and also allow people to develop. So the answer is it takes a while for this agenda to get into place. There are many programs on the ground. You are looking at big numbers. So the mobilization is clearly just a mobilization. It isn't putting in from all those participants involved in JetP. It is to enable people to see that there is progress, there is hope for people to do these transactions, and other people join in. It's meant to sort of engender and to get people to do more transactions on that ground. So to come back to your point, it's taken a bit longer than we initially sort of hoped for, but it's getting there. So it's coming online. If you ask the Indonesian government, there was a change in government recently, as you know. They are still working on it. There are many programs that we're looking at, and we're all considering them.
How have things changed since Germany and Japan sort of took over the leadership in Indonesia, or on the Indonesian JetP, that is? Or has there been no difference to when the US was leading things?
There is a difference. I mean, Japan was always there. So in Indonesia, JetP was pushed off by both the Japanese side and the US initially. And as you know, the US have now sort of de-emphasized that part of the agenda. So Germany's come in. Germany is part of the European Union, so they need to look at things from that perspective as well. I think that it had a hiccup in the sense that you've changed leadership. So the style is different. The programs they're looking at is not vastly different. And it will pick up speed again. For the Japan side, we're the only Japanese bank on the Indonesian JetP. we haven't seen any slowdown from the Japanese government. They remain committed to providing help and providing financing in that respect.
Do you think we can see the shuttering of the coal plant before 2030?
We will see, okay, so I think, as you know, fundamental to growth is the availability of power. And the reason I say that is because the requirement for power is growing in Asia. If you look at what is available in terms of power, and you just look at the cost for thermal power and the cost for renewable power, it looks very competitive for renewable power. But the nature of renewable power is different. So I think that what we are realizing is that if you go, like I said, if you go to a country and you tell them, shut down all your coal plants, it just can't work, right? It needs an ability to understand how the coal plants work, how a baseload coal plant works, and how that affects the country. The other point I heard recently was about, oh, I could just transfer power from this end of the country to the other end of the country. That may be attractive and viable, but it only happens when you have a network, when you have transmission network. And the bank itself is part of the working group, which is in the SSFA, looking at the ASEAN network. And that will allow us to bring power from one end of the grid to where it's needed the most. So where it is effective, even if there's a cost of building transmission, it makes sense. Thereby slowing down the increase in the thermal power plant. But back to your question in terms of shutting down power plants, there are various programs. I mean, the ETM, which has been promoted by the ADB, is still under progress. It is a difficult question to answer because there are many aspects to it. You have the sanctity of contracts within that. You have people on the ground. My expectation is that it will eventually get done, and with that, we have a model of how to do these early shutdowns. But we need to get that done.
Yeah, and it involves innovative financial structures, right? Including the transition credits that Singapore is trying to create.
Correct. So the aspect of it is that it's all a matter of risk allocation, and how you approach the risk allocation, and how you sort of spread the pain, as it were. Because there are many parties involved. There's the Indonesian government. You shut down the plant early, how are they going to replace the power loss in that case? If the equity holders are going to be taken out, are they compensated? And the debt holders, and also the people on the ground. Don't forget, there are people on the ground that work in these plants and receive the power.
More broadly for your business, right? Where are you expecting to see more innovation, be it in blended finance, debt for development swaps? Are you looking at more innovative structures and products within sustainable finance? And where are you building up the team or products for?
Okay, thanks for that. I think I'll just pick up on your point on blended finance. I mean, blended finance is, in its concept, is not fantastically new. It's just a matter of risk allocation and finding who is the best person to put in that particular risk. The end product is what drives the structures. You can't have a structure driving the end product. If you do that, then you will come up with the wrong structure because you got the wrong answer. So you want to look at that. So what we think is that the countries which we think have the ability to do these runs, first of all, in terms of looking at the high risks, will be the countries that need the most development. So, for example, I'm not picking on any country in particular, but if you have a vast amount of coal that you need to do, then you'll need to understand how to structure it down. So what you look at is the end product. So you want the early shutdown. If you want to shut down on these things, the structures have to match that.
Right.
And the risks have to match the structures.
Yeah. So Are you going to be hiring for any particular, not that I'm looking for a job, but are you going to be
I'll make a note of that.
Yes. Who not to hire? Yeah, so will you be adding to your product shelf in any way or hiring for, because we're seeing banks start to talk more and more about blended finance and actually build up their capabilities in that.
Yeah.
So yeah.
So as an example, blended finance is a very active and it's something that we're looking at in terms of what the bank wants to do. So we will already have a team looking at that, and that's driving that scenario. We've started a blended finance fund called Gaia. So Gaia is already been kicked off, and that's going on. For now, we are looking at what we need to do. So the answer is, as the ramp up of demand comes, we will be looking at adding to the team.
Okay. For your established products, right, in green bonds and social bonds, I know we were talking about this and you mentioned that social bonds are doing well for you.
Yeah.
Can you talk to us a bit more about what work you're doing in the social space and how you're seeing that product segment grow?
All right. So, you know, the word ESG, again, people just concentrate on the E part of it. The S part is the social part. So within our own framework, we believe in trying to drive the whole scenario because they feed on each other in order to get the thing done. We are looking at the kind of transactions that are done mostly in Asia tend to be infrastructure. So infrastructure tends to be the energy portion of it. However, a lot of financial institutions and all the governments try to drive the social part. A lot of our loans that we're looking at in terms of the social facilities or social link facilities tend to be based on the frameworks provided by the government.
Okay. Do you have any numbers that you can share with us? What increase or what growth are you seeing?
Well, I have a big number, which is the 100 trillion yen number. So that is the number which our bank has committed to raising in sustainable finance. And that number has been raised 3 times since we started the team. I don't take any credit for raising that number, but it is, you know, clear to us that that is something that the bank needs to do. That is supporting our clients in terms of getting to the net zero numbers. The bank itself also has a net zero target for 2050. And we aim to continue to reach that target, and that is well within our ability to do.
Okay. And speaking of supporting clients, are you planning on changing the baseline scenario or temperature for transition pathways for your clients from 1.5 degrees to something else? 2, 3? Where are you at right now?
Okay, so the answer is we stick to the frameworks then. So the science-based frameworks, as well as the net zero targets that were set, which are still at 1.5. The Paris Agreement is still at 1.5. They haven't adjusted it. We continue to work to that. I don't think we've reached 2050 yet, and you know, there is still hope for us to be able to move that trajectory. That trajectory is the one that keeps me awake, as I said before, and that's the one that we're working towards.
Are you assessing, or how far are we from having a situation where banks assess companies on their physical climate risks and include that in the credit risk assessment, right? Decide how much to lend to them or how many bonds to underwrite or what volume of bonds to underwrite as a result of physical climate risks that companies face?
We are quite close to that.
So you're not doing it yet, but you're working on it?
We're working on it. And it's partly driven by regulatory requirements, partly driven by what our clients tell us. But yes, I think there will come a time quite soon that we will be looking at that scenario.
Okay, I know we've run out of time, but very quickly, what can companies do in response to that, right? Should they be setting up assets or factories elsewhere? Like, how should they be thinking about making sure that they're high up on your scoring or the assessment?
Okay, besides having a conversation with myself and the team, they should be looking at their trajectories. Like I said, it's all about the trajectories and mapping out what they need to achieve net zero. And then we have that conversation about how that is met and how we can help them. So anything we do to help them is part of our sustainable finance targets. So that's what I believe should be done.
Okay. Great. Net zero is on your mind as it is on everyone else's here in the room. Thank you very much, Colin. Thank you for speaking to me, and thank you everyone for joining us today.
Thank you.
Please welcome to the stage Giorgio Fortunato, Head of Clean Energy and Power at Google Asia Pacific, and Yi-Mei Leong, Managing Director for Equinix Singapore, for a conversation with Bloomberg's Stephen Stapczynski.
Hey folks, wasn't that great? Ishika and Colin before that was a really nice panel right there. I really enjoyed that discussion. Hi, I'm Stephen Stapczynski. I lead Bloomberg's Asia news coverage for energy. This is a very exciting panel today. We're going to be discussing AI and how that drives global, both energy demand, but also how it changes how we look at reaching really ambitious clean goals. Now, with me, I have Yi-Mei Leong. She's the managing director for Southeast Asia for Equinix Singapore. Singapore. Yeah. For Singapore. And we have Giorgio Fortunato, head of clean energy and power at Google Asia Pacific.
Thank you for having us.
Thank you both being here with us today. Let's start with you, Yi-Mei. I'm really curious. You're in the section of the AI, really in the center of the AI industry, both in terms of the needs for data centers and how the world is going to be viewing how the AI boom and more requirements for data center changes and shapes energy demand going forward.
Yes.
Now, what have you seen change over the last few years in terms of not just what you're asking from your suppliers of energy, but also how the industry is looking at how AI is driving energy demand going forward?
Yes, so thank you very much for the opportunity to be here today. Equinix is the world's digital infrastructure, and we have over 250 data centers across the world. I think we clearly have been in business for over 25 years, and we started because Equinix really stands for equality, internet neutrality, internet exchange. Now, however, so we've always talked about digitalization, digital transformation, and that's kind of taken its path, you've had the .com era, and then you had the clouds, the online trading systems coming online, and then you had the clouds, and then now clearly you have AI right in front of us, right? So that's been a gradual adoption of digital across enterprises and companies coming online virtually, and and the cloud clearly is where it's housed in the data center, right? So you've had the retail, wholesale, and the hyperscalers. However, with AI, it's kind of just pushed that whole demand from what was a gradual to a hockey stick. And because of that, there's been a lot of investments that have gone behind building these huge data centers. So, in the last 18 months, we have seen grids around the world come to a halt because this demand clearly just was taken off the charts. And the grids can't cater to that amount of energy. So, digital is clearly going to continue. AI has clearly accelerated that growth for data center space, and because of that, powers have moved from megawatts to gigawatts, and that will continue, I believe, for a couple of years. But I think it will come down because there's so much capacity that's building right now and the power, in many countries have actually completely stopped. Singapore basically called for a moratorium 3.5 years ago, right? And it was because the grids were equally full, and equally it was because it was to really contain carbon emissions and ensuring that Singapore meets its net zero plans.
I want to just pull up a chart now because I think this is a good segue. We have a chart here, AI drives a quadrupling of data center power demand in 10 years. Now this is from our colleagues at Bloomberg NEF. But what I find really striking about this is the breakup of where we're seeing the demand growth. I mean, clearly the United States and China are a big part of this. But Southeast Asia is a sliver at this moment. I mean, what's your take on that? Do you think that is that because of what we're talking about, where it doesn't have the capacity to really add a lot, or is there not much demand here for the data centers in general?
No, absolutely not. I think Southeast Asia is really growing in demand, and if you look at the ASEAN growth basin, right? There's going to be so much more demand with all this digital first entrance, and that's just going to grow. But I think the capacity demand, as Colin has mentioned earlier, that needs to put in place. That takes time.
Right.
Infrastructure takes time. Yeah. So there's definitely demand.
Thank you. And let's jump over to Giorgio real quick. Thank you for joining me today. I think, when you look at what we've just talked about and we're looking at this demand growth, there's also the question of how do we achieve meeting the energy needs while also meeting our green goals. Google has some of the most ambitious green goals in the industry. Does this huge increase in energy demand put any of that at risk, or how are you kind of getting around those issues and those bottlenecks?
Thank you, Stephen. This is a really good question. Look, AI is one of the most transformative technologies in the world today. And our goal at Google is to help as many people as possible access this technology and benefit from the deployment of AI. Now, this is why the energy transition and the economic development are so strongly interlinked today. In order for us to realize that, we need energy. Mm-hmm. So we have witnessed, as you mentioned, an increase in our energy demand over the past few years. Only last year, our energy demand has increased by 27%.
Is this globally?
Globally.
27.
But now, what is the good news here? The good news is that at the same time, the emissions from our data center energy has gone down by 12%. So it's a really good news because we're proving that it is possible to increase our energy demand, but at the same time decrease our emissions. One is going up by 27%, the other one is going down by 12%. And let me just share how we are achieving this. Two main pillars. The first one, energy efficiency. We are striving to build the world's most efficient infrastructure. And compared to only 5 years ago, today we can deliver 6 times more compute power with the same amount of energy. Not 6% more, 6 times more.
Right.
So this is a massive gains that we are witnessing in the energy efficiency field.
Sorry, I'm just a follow-up question to that. That's really interesting. And do you think that some of the hype around the massive energy requirements for AI is somewhat overblown because of these efficiency gains?
I wouldn't know if I would put it that way, but definitely what is true is that energy efficiency over the past 20 years has offset the demand for electricity on the electricity grids. And today, electricity grids all over the world need to adjust and modernize and adapt to this new wave of demand. So this is really what we're seeing.
That's interesting. I mean, from Equinix's point of view, have you seen those similar sort of efficiency gains with your facilities?
Most definitely. We have targets set every year to reduce, improve our energy efficiency by at least 10%. So, over the last 5 years, we've improved that massively. And to Giorgio's point, we've used more, but we've equally been more efficient. So, and over time as well, technology is improving. We are also deploying AI sensors in our data center to monitor use so that we calibrate the operations to ensure that we're even more efficient. And there are also IT equipment now that's coming out that's more efficient. And we are also adopting the A1A standard where we are increasing the temperatures of data center from what used to be 22 degrees right up to 32 degrees. So now, obviously, you can't jump from 22 to 32, but gradually over time, with everything that we are doing, we definitely are squeezing more out of every megawatt that we use.
I mean, that's really fascinating. And even using AI to increase your efficiencies. I mean, are we getting to the point where we're going to see AI manage this as well? One thing that I always think about is, wouldn't AI be a great agent for the grid, right? You could manage demand response. Are we seeing that as well in data centers? Are you beginning to implement that, or is it still too early?
I think it's still too early right now, but the future with AI and robotics, anything is possible,
That's a great way to look at it. I'm very excited. Now, I want to just take a quick step into the world of politics very, very quickly. With Donald Trump being elected in the United States, there has been, to some degree, a de-emphasis on ESG, at least within the U.S. administration. Are we seeing, Giorgio, any sort of step back at Google when it comes to their ambitions to reduce emissions?
Well, I think our targets are there, 24/7 carbon-free energy. We are working towards meeting our energy demand every hour of every day with clean energy. It's no different in Asia. And here we are encouraged by a lot of the development that is happening around clean technologies and around regulations. Look, just a few years ago, it was impossible to sign clean energy power purchase agreements in many of the markets in APAC. And I was in India last week, and the levelized cost of electricity for solar is actually already below the cheapest alternative. So, and that is the way we can make sustainability sustainable and grow even further. So I think our focus is really to understand what are the technologies that are part of our portfolio for the future and scaling those technologies so that we can meet our demand with clean energy.
I'll get to those technologies in a minute, but I just want to again focus, Southeast Asia, are you able to, because as you said, there are some countries that you still can't get power purchase agreements. How does that affect your targets, your green targets? If you're not able to secure the energy, does that risk putting off your green goals?
It's an opportunity to bring that investment into the market and to work together with many of the stakeholders, whether it is developers, financiers, government, to actually make that transition happen faster and in the most effective way.
And I mean, yes, saying that, of course, that's what we want. But in reality, are you seeing any difficulties doing that?
Oh yeah, it's challenging, of course. We acknowledge the challenge of doing that. Look, across APAC, we have been working to tailor solutions to the different markets where we operate. These markets are all different to each other.
Right.
When you look at Japan, for example, there is not a lot of space to develop utility scale solar. So what we have done is we have aggregated the supply from very small projects to supply for our data center in Inzai 40 megawatt. In Taiwan, the problem is the lack of supply. There's not enough supply. So we have made a capital investment to accelerate and develop a 1 gigawatt pipeline of solar projects. That's a massive amount of power. And together with that, we have invested in offshore wind and we have invested in geothermal. So we are looking at, okay, what else can be done in the different markets where we operate? Australia and India, other good example. These are cloud regions for us. So we've worked with partners to create innovative structures, contracting structures that allow them to go out and procure clean energy on our behalf. It's a mix of wind and solar, for example, in India, where we have this hybrid project. So it's really like tailoring the solutions to all the different unique circumstances of the market where we operate. That's how we are approaching it.
That's a fun job, isn't it? That sounds really exciting. Now, I just want to open this up to the audience real quick for a quick question. I think we're going to throw it up here. You can use this QR code, I think, to vote. Very quickly, what will most shape Asia's energy mix as AI expands? We gave you 4 potential answers: AI-driven efficiency gains, data center energy demand, policy and energy security needs, as well as investment in renewables. Now, Yimei, I'm just going to pose that to you. What do you think? How would you answer this question here?
I think Asia's energy mix as it demands, clearly, if I look at ASEAN, and Singapore's been really pushing the envelope on this front.
Yeah.
Solar is clearly the obvious one. But hydrogen has been talked about, but the reality of it happening is still a long way. And clearly then there's gas, LNG gas, and CCS, carbon capture. And, recently Singapore's just also launched the CFA2, and for the green energy transition options that we're looking at, it's really ammonia, the ammonia pilot that Singapore wants to run, as well as bioenergy. So I think all this is also going to spur a lot of activity in the region. And then clearly Singapore's also talking about solar imports, so that's going to create investments in the other countries that will start by exporting, but then at the end of the day, they will also start using. So, I think these are all the possible scenarios. And of course, there's SMR. From an Equinix point of view, we have invested in Oklo, 500 megawatts. That would be advanced fission technology. Clearly, countries need to ensure that risks are mitigated. But that's one of the cleanest sources of energy.
But when we talk about nuclear SMR for use in Singapore and Southeast Asia, is that what you're talking about?
Yes.
And what's the time frame? I mean, this is probably not a 2030 sort of thing, right?
No, I think there's hope that within the next 8 to 10 years that can happen, because there's so much work that's being done in Singapore now to talk about how you de-risk, right? And how to then implement it safely.
I mean, do you think that these projects require big corporations to sign PPAs and things like that to support? I mean, you saw what happened with 3 Mile Island. 3 Mile Island received a giant power purchase agreement from Microsoft, yes. And that was big news, and that helped, that helps fund that retrofit there.
Yes.
Should we be seeing tech companies in this region step up and do this as well?
I think government regulations will help drive some of that.
Yeah.
And like I said, the Singapore government is definitely pushing the envelope on that. So it's like, what? If you want data center capacity in Singapore, you have to be green. So, that kind of pushes enterprises to start really being more responsible. But from an Equinix point of view, we've always adopted a future-first strategy since 2015, and we are really already 96% renewable around the world.
Oh, wow. That's an impressive figure there. I want to go to this poll very quickly. We got the figures up here. You can read it behind me. It looks like the folks in the audience say that it's data center energy demand that will shape Asia's mix as AI expands, and also policy and energy security needs. Clearly, we just talked about policy right now. Now, we just started a small discussion on SMR and nuclear. Giorgio, I want to throw it over to you. I know that there are a lot of different, so I'm going to clump SMR and advanced energy technologies. And I know Google is very much looking at a wide spectrum. In Asia, what do you think makes sense? Do SMRs make sense in Southeast Asia for you folks, or what are you looking at?
That's true, Stephen. It really ties into the broader perspective of different technologies. And we're working on a portfolio, on a broad portfolio, as broad as possible, of different technologies, because that's the fastest and the most effective way to decarbonize the grids where we operate. And let me explain. We have, of course, mature renewable energy technologies. We have wind, we have solar. These technologies, especially when you look at Asia, we believe that there is still a lot of untapped potential. Yeah. These technologies can be maximized further. But see, like the wind is not blowing every time, the sun is not shining every time, right? So we also need energy storage. We need a portfolio of advanced clean technologies, firm technologies that can complement the gaps in generation. And that is how we can achieve the 24/7 profile we talked about before. In Asia in particular, we see geothermal. We have invested in geothermal in Taiwan, where we have investment and offtake agreement. Of course, it's more than the initial capacity. Mm-hmm. It's about planting a seed, sending a signal, and to support these technologies which meet a lot of obstacles, especially at the beginning, in order to scale to commercial operations. We have done something with biomass as well here in Singapore, where we use the waste wood from the logistics industry and from the horticultural waste to actually provide clean energy for our operations in Singapore. So, you know, the mix of the two, advanced clean technologies and traditional renewable energy technologies, will be what we are working towards. Look, if we do this right, we will be able to, first of all, decarbonize the grids where we operate faster and most effectively, and second, rely on fossil fuels for less than we need. So that's how it fits into this picture, yes.
And I guess, you know, when you look at, I'm trying to just understand for Google and for your operations, where are the more challenging regions? Is Asia among the most challenging region to decarbonize?
It's absolutely one of the most challenging parts of the world, especially certain markets. And I also would like to say, Asia is a very broad.
Of course, yes.
Right?
Yeah.
So we have markets where it's easier to procure clean energy, where it's most cost effective. We have markets where the regulatory frameworks, the current regulatory frameworks are still, need still to mature. And so
I mean, let's get into it. Like, which ones do you think are the challenging ones that do need to kind of push the envelope?
Yeah. Look, I think Taiwan has been a challenging one for what I mentioned before on the lack of supply available. And so this is why, you know, we have the demand response going on. We have the offshore wind, we have the geothermal, we have the solar. And our role has really evolved from being an off-taker to being technology catalyzer, to invest in new projects. There's an entire spectrum of things that we're doing today that, you know, maybe we weren't doing in our traditional role as an energy buyer, as an energy off-taker. And so I think that's really an inspiring part of what we're doing.
Yeah, and to add to that, Giorgio, don't you agree that at the end of it is really demand and supply, right? Absolutely. As the demand increases, the supply will happen. You know, like right now in some of these markets, it's very expensive. That's the other thing. So it's a little bit prohibitive. But, you know, I think companies are stepping up for their ESG goals. I don't think the companies that have committed have not done that, have not decreased it despite the current administration. You know, so I am optimistic. I mean, I sure hope that, as the keynote speaker said just now, by 2025, we actually start a decline. I think that would be the light at the end of the tunnel we all see, right? Given all the decisions that we've taken in the last couple of years and focus on sustainability.
I mean, I think we've talked a lot in the last 20 minutes about what companies are doing, kind of pushing the envelope. Are we in a place where you are seeing, I mean, obviously in the last 5 years, we have seen companies step up, sign PPAs, underpin technology. When are we going to get to the point, at least in Southeast Asia, where these companies with their green goals are in the driver's seat, and it's not something that we have to depend so much on policy and government? Or does it never go that way? Is it more you have to go hand in hand in this entire kind of road?
I would say it has to go hand in hand. Yeah. I think for Equinix, we've made a commitment to be net zero. And clearly government regulation will help that enforcement, that across the sector equally everybody comes to join the party. And if all of us do, the the energy, green energy transition options will be made more available. So, you know, that demand increases and that supply increases and everybody wins.
How do you feel about that?
It definitely has to go hand in hand.
Yeah.
We are working hand in hand with government, with developers, but also with peers, with our partners. We are a founding member of Asia Clean Energy Coalition that is working to improve the energy, to create more conducive environments for clean energy. We work with the Semi-Energy Collaborative, we work with SIBA. And so, like, I think it's really bringing that opportunity and realizing that as the energy demand keeps growing, energy efficiency and clean energy will be the key enabler for to deliver the AI value. And so working hand in hand with governments to realize that.
And you still, I mean, kind of going back on your point, you still think there are a lot of low-hanging fruit in terms of deploying just traditional solar and wind?
Absolutely.
Yes, absolutely.
Even in a place like Singapore, there's still more potential to maximize that.
Well, in Singapore it's a bit tight.
Right.
You know, I mean, there's only so many rooftops we can kind of plaster
Right.
solar panels on, right? Which is why Singapore is taking that creative, long vision outlook on looking at other energy options.
And also importing, right? I think you mentioned importing.
And also import. And you know, don't forget, right? I think the other one that is nearby is the Sarawak hydro opportunity, which the Singapore government has also been talking a lot to. Yeah.
So in a way, I mean, do you see Singapore, at least in the region, as a leader of pushing this forward?
Absolutely. Yeah. You know, I think Singapore's intent is to play a lead role for the ASEAN market, you know, and clearly Singapore has interests because our resources here are tight. But you know, I think Singapore wins and the region wins.
That's a nice note to end it on. We're out of time. I wish we could continue this, but thank you both for spending the last 20 minutes talking.
Thank you so much. Yeah.
Thanks,
Appreciate
Steve.
it.
Thank you.
Thank you.
Yeah. Thank you. Thanks, Stephen. Thank you.
Please welcome to the stage Paul Tham, Group Chief Financial Officer at CapitaLand Investment, for a conversation with Bloomberg's Nina Trentman.
Thank you very much. I'm Nina Trentman, Senior Editor with Bloomberg News and host of Bloomberg's CFO Briefing, a newsletter for and about CFOs around the world. Paul and I got to speak earlier, so it's good to have you again. Paul Tham is the CFO of Singapore-based CapitaLand. For those of you who, I guess you're all familiar, but for those of you who don't know it, it's a real estate investment company with assets in over 45 countries and 270 cities, so a big presence. Paul, we have only 20 minutes, so I guess we'll jump right in. You've laid out multiple sustainability targets to be achieved by 2030 for CapitaLand. I think you hit your water consumption targets ahead of time. Just curious how you're thinking about the rest of the targets and also which ones are the hardest to achieve. I did note that carbon emissions have actually gone up in recent years.
Shucks, we were hoping nobody would catch that. No, I think we set these targets in 2019. To be fair, our business strategy changed a little bit. At that point, we were really a property developer. And over the last few years, we decided we would pivot to really focus on asset management. For us, that means growing from the 90 billion assets we manage ideally to US 160, 170 billion. So the growth is faster than we had originally planned, which we realized impacts our goals quite a fair bit as well. I think following the last panel, there are certain challenges that they mentioned that impact us as well. So I think just as you said, on terms of water efficiency, you know, all taken care of in Singapore, relatively easy to do, which is 1/3 of our portfolio. On the waste component, also generally something that we've been able to achieve over time in terms of waste efficiency. We're still working on our recycling component, but we think that's manageable. I think the two parts that are a little trickier for us is one is the renewables component. So we had a commitment that we would get to 45% renewables by 2030. And obviously, the fact that we are Asia-based means we've got slightly different challenges in different markets. So in India, generally, we think that is more than doable. In fact, we have our own captive solar plant for one of our business parks there. As we grow the business, we do think that geography can be easily managed. Similarly for China, we believe we can match that quite well. The big challenge for us is 1/3 of the portfolio that sits in Singapore. And for the Singapore component, I think we need a little bit of help from the government in terms of some of the initiatives that they are running to make this more workable. The other two things that we consider in order to make that renewables one work is one is we are looking at a lot of new technologies. So we run a Sustainability X Challenge where we invite companies from all around the world to propose solutions that are innovative for building technology. And I think we've seen quite a number. Most of them we've started to use a number of them in our properties. So whether it's waste, to use that for building pavements, low carbon materials, all of this I think is helping us get there, but we still have a little bit of a gap. And I think that will take policy change for it to work for us. As I joke with the team, our last fallback solution to hit our targets is in 2029, we're going to sell all our data centers.
I guess we'll see whether that happens. I'm just wondering, actually, for you as a CFO, you're, of course, focusing a lot on financial results, allocating capital. I'm just wondering, in terms of your role towards the company achieving the sustainability targets, how would you describe that, and how involved are you in this process?
So I sit on all of our investment committees and a lot of our asset planning. But I'm not sure how many CFOs there are in the room, but I was joking with my team the other day that CFOs are got to be the worst people to deal with. We're the most skeptical. People tell us this is the revenue projections. We give them a raised eyebrow. They tell us this is how we're going to achieve costs. We don't believe it. We've got to be the absolute worst people to work with at times. So it comes with a natural tension, unfortunately, I think. There are two pieces to this, I would say. One is CFO job is always to manage capital, make sure we're optimizing, we're being efficient. And I think that becomes the challenge on the sustainability side is proving that the investments make sense holistically for the company. Strategically, as a group, CapitaLand, I think we're very clear that this is something that's important to us. Fundamentally, we do actually believe that good quality green buildings are good business investments and also good for the environment. So I think that part strategically is easy enough. The problem always comes when everybody comes by with a request for green capex. And then things get a little bit tricky. So we've just rolled out, we have a return on sustainability framework. So this is, as you have for most property investments, you try and get a return level. So we have our own system now where we account for a number of factors relating specifically to real estate. So how much impact will there be on utility savings? How much will you get a green rent uplift? What might your potential exit be? How much interest savings will you get from the sustainability-linked financing? And we factor all of these 8 components in now whenever we're able to assess whether the investment makes sense. I would say based on sort of the trial test case, and I give it to the team, they've really done a good job trying to make this work. But so we look at, say, 6 buildings, and we can tell you that 4 of them, the green investments work, and 2 of them don't. Which to me is a better indication that this is a framework that potentially works, rather than one that tells you everything works or everything doesn't. So I think we look at it that way, but it's still individual investment based, because I think a lot of our LPs and our investors expect that while we may have an overall principle on how we want to approach this, the economics for them as investors has to make sense.
Yeah, it's certainly, of course, an interesting time for ESG and sustainability right now. I'm based in New York, the country in which President Trump got reelected, and in which there's a bit of a pushback and pullback, I would say, from sustainability across the board, not just from the government, but also from businesses. I'm wondering, with the US being such an important market for companies around the world, what's the impact you think on businesses in Asia? Does this US pullback influence decision making for you at all? Is it noise? How do you think about it?
So we definitely hear about it a fair bit from our investors, both on the public side and the private side. I would say, so it ties back strategically, we think having high quality green buildings makes sense in all the markets we're in. So I think for us, the decision becomes relatively clear. The challenge really for us is, as I mentioned, on the individual investments, we have different LPs, different investors for each fund. And it changes a little bit. I wouldn't say this most recent incident or challenges coming from the noise from the US is the first time this happened. If I look back the last 5-6 years from a sustainability viewpoint with investors, I remember 2018, 2019, and in this role and in previous roles, I've always generally done a lot of the public investor engagement. So I probably do 50 one-on-ones a year with public investors. And during 2018, 2019, we got a lot of questions about sustainability. I remember that. Most meetings, somewhere between financials, rent reversion, somebody would ask a question or multiple questions on sustainability. When we went into COVID, I remember distinctively it went absolutely quiet. We didn't take a single susty question, and I think it was for 10 months. I only remember because at the end of 10 months, somebody asked me a sustainability question. I couldn't remember the answer.
Right.
Because at the time, everybody was purely focused on how the business was going to survive, on tenants coming into buildings, are there people in your retail malls, how do people get to the office? So there was a lot of focus then. And during that stretch, I would say we saw interest from investors in the sustainability component on, particularly the E component of ESG, really waned. And we saw that pullback in interest, but it didn't change our investments. Particularly, I guess for us, the investments tend to be 5 to 10-year investments. So I think we held the course during that process, during that time period. And over time, the interest came back, particularly, obviously, European investors probably being the strongest on this, and then US and Asian investors. So most recently now, obviously, we still take this question a lot from European investors in particular. And the US side certainly has pulled back a lot. Pulled back to the point where we realized we're better off not raising the topic, just so that we don't get any pushback. But I would say from a principle basis, it hasn't actually changed the way we look at the investment. We're still on the same course as we were over the last 5 years.
And so, but in conversations with specifically US investors, it has proven that it's better to just not bring it up?
So I find the US investors that we engage with, they've always been much stronger on the S&G components, which we also do appreciate. They'll spend time talking to us about for our building construction, about the labor that is used, about the governance, particularly for the companies or the joint ventures we work with. So they've always been stronger on that component. On the environmental component, these days, generally, they tend to be very quiet, and unless it's raised, we won't be the ones to bring it up.
Well, I guess if it doesn't get you any points with them, then it's probably a smart move. Just wondering, actually, in terms of your financing strategy, I know that you've in the past issued green bonds, both on the REIT level as well as on the corporate level. I'm just wondering, with the decline in the greenium, basically the cost benefit that used to exist between issuing green bonds or sustainability-linked bonds and plain vanilla bonds, with that vanishing, does it still make sense for you to use these financing instruments, or not so much?
So from a pure financing viewpoint, generally I would say we've seen it come down over the last 7-8 years. I think when we first did green bonds, we used to see maybe a 5 to 10 basis point spread between, say, one of our typical 5 years versus a green 5-year bond for us. So we noticed that come down from 5 to 10 down to 2 to 3 basis points. I would say these days, actually, it makes almost no difference if we go out. So from a financial viewpoint, there's been a little bit less benefits to that. I think the market's gotten a little bit more used to making sure that there's either a sustainability-linked component or that the company has the right focus on ESG, particularly for real estate in Singapore. And I think this would be different if we were issuing our bonds in Malaysia or in India. See a little bit of difference, but Singapore market's a little bit saturated, and so we definitely don't see that. But we still do continue, and for the entire group at CLI and for all of our REITs, we do this partly as discipline for ourselves. We like to keep a proportion of our bonds out as sustainability linked so that we don't drift away from it completely. And quite honestly, I think having the framework in place also makes us and the treasury team a little bit more aware of how the market considers these things and why it's also important for us to make sure that we are checking the box in some of these areas as well.
We have hosted a CFO roundtable this morning, and one of the themes that came up was this question around sort of, do you need a carrot or do you need the stick to get companies to comply with standards like scope 1 and 2 and 3, or does it also, like, is there also an end to that, given that, of course, with more requirements come costs, and with costs comes the question of, like, why are we doing this? I'm wondering how you're thinking about this.
Yeah, needless to say, if there are any government officials in this room, you know, we always support the carrot method. Tax incentives are our favorite thing. So certainly that would help. I think any form of incentives would certainly be welcome. I think any company would have that in any aspect. Though I would say particularly for sustainability, though, the truth is, for ourselves, actually we quite like the idea of stronger regulations and stricter controls, just to level the playing field. You know, for ourselves, we follow different green frameworks for different buildings in different countries. In Singapore, the standards vary. One of the biggest complications for us is multiple jurisdictions, different frameworks, and different criteria to look for, and different ways for things that we have to check off when we are trying to make sure that our buildings are upgraded to the right standard. And we also find that there is a little bit of inequality, quite honestly. I would say for a lot of the big fund managers or property players, we try to keep to a certain standard because we do believe that first there's a degree of responsibility to set what is the right benchmark level. But then very often we'll find potentially smaller companies or companies looking for a different edge trying to give up on some of these areas. And then we end up going to, whether it's the same investors, the same LPs, and all of a sudden our returns may be a hair lower, or we may have underwritten it as such. Because I can tell you, and for those of you in Singapore, for instance, you know, when you try to lease up a building in Singapore, everybody has certain requests on what they would like on the building. And very often we always get asked about green certification and the green aspects of the building. But then when we have the discussion on rent and we tell them it is $10 or $10.05 for that little bit of difference, all of a sudden we get a lot of pushback. So actually having a standardization on the requirements and the metrics, particularly across multiple jurisdictions and for sustainability reporting, actually would help us very much.
You mentioned earlier this term green capex, and it sounded as if to some degree sort of course that's something that you're allocating capital towards, but it also sounds as if it's sometimes difficult given that there's a lot of asks and probably not all meet your return on investment criteria. Just talk to us about how you're navigating that.
So obviously we look at different types of capex. There is capex for a building which we would say is absolutely required. This is changing the maintenance on a lift system. Right? Now, the last thing we want to do is get anybody stuck in the elevator moving up and down. So those for us are critical capex that will get refreshed on a regular basis. Green capex sometimes falls in that bucket, sometimes it doesn't. This is for us any type of capital expenditure that will improve any of our environmental sustainability, help us in achieving any of our environmental sustainability targets. So this could be improved chillers, this could be a better building management system. All of these have different ways of optimizing, whether it's optimizing our power usage, optimizing our lights and chiller systems, and that comes definitely to a degree of benefits. The tricky part being that some of these, for instance, our chillers, they may not be that old, right? And you know that the life cycle is you could run these for 5 more years. But are they energy efficient? Probably not as much as a top of the line one would be. So they become very individual financing decisions. And when we look at that, it's then a question of, okay, are there other alternatives? And this is why we spend so much time on technology. Are there additives that we can use? Are there polymers or films that we can use to kind of streamline some of this equipment and make it more efficient without having to do a full CapEx refresh on that? I think we spend a lot more time discussing this than we used to. It used to be a pretty straightforward discussion, and that's one of the reasons we put the return on sustainability framework in, was to give us a tool that can really help measure some of these aspects.
You mentioned this premium for green buildings and the question or the back and forth with potential tenants wanting a lot of it, but then being surprised by the price of it. Has that conversation changed at all in the past year or two? I'm just wondering if this sort of in certain parts of the world, maybe more ambivalent position towards ESG and sustainability is also impacting clients, or if, for example, the somewhat more uncertain economic environment is leading maybe more of them to say, you don't need all that green stuff.
So certainly it does differ by market, and we see that based on the premiums we see in buildings. In a market like Europe, we'd see higher premiums, 5 to 10% for that, partly because there's a wider group of older stock in the market and not as many green or higher end buildings. So you tend to see a premium for that. In Asia, it's very diverse. In a market like Singapore, there is almost no premium for a green building, partly because a lot of our buildings here are new. Somewhere along the way, the government's offered us additional floor area if we tear it down and we rebuild it. So we tear it down and we always rebuild it new and green. So you at most see a 1 to 2% premium in a market like this. So I would say part of that is fundamental to the different geographies. And that impacts how much of a green premium you get. In a market like Australia, for instance, you generally will get better returns on it because there is more focus on ESG and that desire. So that part becomes a little bit stronger. But I think the challenge for real estate right now is across the market, it's been a tough few years for real estate. I would say this is globally, it's been challenging for real estate. So I would say that premium has shrunk. But I don't think that can necessarily be isolated to less of a focus on ESG. As much as everybody is looking to see any way that they can get a better return on investment. So I think ESG and sustainability gets impacted just as much as everything else from that lens.
Right. We have about a minute left. I'm just curious if you could talk to us a little bit about your outlook for the industry. We talked earlier about the outlook for China. I'm just curious, with you describing the tough years behind the industry, should we expect some recovery this year or next?
We're certainly hoping the second half of the year will be better than the first half. First half was challenging. First quarter of the year, I think we were all very positive on the outlook for the year. Second quarter, everything got put on hold. I haven't seen such a slow transaction year from real estate in at least 15 years, I would say. Second quarter was incredibly unusual. I think people have a little bit more positivity and confidence going forward, or at least a degree of certainty that the second half is a little bit more stable. So I think we're going to be much more active ourselves, which will be good for the company. And I would say that's likely that the rest of industry will be like that too. So I think much more positive for second half than the first half.
Okay, well, I guess we'll see. Thank you very much for taking
Thanks,
the time. It was
Thanks.
great to have you. For those of you who haven't signed up to CFO Briefing yet, some shameless self-promotion here. You can sign up to it on Bloomberg.com. And I look forward to all your feedback. Thank you.
Thanks, Nina.
Thank you.
Please welcome to the stage Grace Tsai, co-founder and CEO Unravel Carbon, for a conversation with Bloomberg's Anna Kitanaka.
Thank you for joining us today. Just 2 sessions ago, we heard about how AI was driving up energy demand. And now we get to talk about how AI can be used to try and offset carbon use. So I'd like to start with talking a little bit about how you founded your company, Unravel Carbon. You are a 2-time exited founder of companies. You also went onto the venture capital side. You founded a fund investing in tech startups. Now you've returned to the founder side with Unravel Carbon. Can you tell us a little bit about why you started that and what problems you were trying to solve?
Cool. Good afternoon, everyone. Yes, having been both a founder and a funder, I definitely prefer being a founder. A little bit controversial there, like the torture of and rewards of building companies from scratch. So for those of you who are new to Unravel Carbon, we are an agentic platform for sustainability outcomes. We have a decarbonization platform that helps companies measure, track, reduce, and report. And this year, we made a hard pivot to be the first in the world out of Singapore to build AI agents for sustainability teams and consultants. And going back to your question on how it started, after my second exit, I was advised to write a will for my then 2-year-old daughter. She's 6 now. And I thought it was a simple process, writing a will like our parents did, paper on pencil, pencil on paper, and then that's it. But it's a complicated process for those of you who have been through that. And for some reason, my mind just went to the future, to when she turns 30 and 40. And I bumped into this whole climate crisis. And I found out that out of 400 million companies in the world, less than 10,000 were measuring their carbon profiles, and even fewer were doing something about it. And so I was like, why is this the case, right? And at the same time, 93% of the world's GDP have made net zero pledges. We have to halve our emissions as a planetary species, by 2030 and so on. So I just self-educated myself for about 9 months and, came up with the Unravel Carbon idea where we're able to ingest all sorts of raw files, raw data from a company, and show them in very granular, accurate manner their carbon profiles, their hotspots, and how to reduce them. So yeah, we're 3.5 years old, and very happy to have. We are the partner for companies like AIA, SAT, Zalora, Salad Stop, and we are used in now 52 countries.
Can you walk us through a little bit about how it actually works? If you could give us some examples of how it will digest the data and advise on how to get rid of the carbon footprint.
Yeah, so it's many people underestimate the technicality of the climate science that goes into aligning with the GHG protocol and following all the compliance requirements across jurisdictions. So how it works is that we would ingest raw data in a company, right? Most of you know this already. We either, build an API into an ERP system, like a SAP system, or we can ingest Excel files into our system. And we have built one of the largest databases of emission factors in the world. We have 1.3 million emission factors. Some we purchase, we have to purchase. And of course, we have absorbed all the government's data around the world as well, and then we use all of that to generate highly compliant and auditable profiles, and we're able to show, hey, this business unit or this business facility has higher than usual emissions compared to per revenue dollar or whatever intensity metric, or per square foot, and that deserves a double clicking too. With AI agents though, because we realize when we talk to our customers, the data part is still very difficult, right? Collecting data from 600 data owners, 1,000 suppliers, it's still a very painful project. With the platform, we could bring down the time from 10 months of a year to maybe 6 months, right? And our customers have experienced that time saving. This year, as Sam Altman says, 2025 is the year for AI agents. We built 6 agents. 3 of the AI agents are for data collection, data transformation, and review. We could bring down that time from 6 months now to 1 to 2 months. So I am off the camp, we were sharing at the deep dive earlier, I'm off the camp that the era of SaaS is coming to an end, software as a service. It will be replaced with a multi-agentic collaboration approach where agents will work with humans and agents would also work with agents. And we just happen to be the first in the world to build that for sustainability. Because you already have, Harvey for legal, you have Glean for enterprise, you have a couple of ones for doctors or researchers, but it's always the CSOs that are often forgotten, in this kind of innovative push on the Gen AI front. And yeah, so right now our agents are able to even just read your PDF files as they are, use our OCR to transform them, parse it onto the templates, and the data review agent will check for anomalies and stuff. So it's now the agents supporting our partners and our customers' teams. So that's pretty cool.
So it's not something you can just use ChatGPT for. You've actually built a specific model for this.
No, unfortunately not. So generic LLMs like ChatGPT or any of the Anthropics models, they do not have any domain expertise. They are very good for many different tasks, but they do not have domain expertise. So we had chosen, to build our agents on top of Anthropic Claude Sonnet. We find that it is better and more deterministic than a ChatGPT model. But both OpenAI and Unravel are Y Combinator companies, so I should support OpenAI still. But we find that the AI agents that we build needs to be infused, right, with the sustainability knowledge. So that's what our data engineers and our machine learning engineers do to add value to the wider ecosystem. For example, our gap analyzer agent can produce a 40-page gap assessment in under 1 minute. And it can be done against the ISSB IFRS S2 framework in under 1 minute. It can perform against GRI in under 2 minutes because GRI has a lot more evaluation criteria. And our team has to, the word is not train, but the word is to fine tune and to infuse the LLM that we chose to be on top of to do that. No, so you cannot use ChatGPT for sustainability use cases.
And that 1 minute, how long does it usually take someone to do it manually?
So manually, so for a company, a lot of you would have started your journeys, right? It always starts with understanding your gaps. So normally you would hire a consulting firm that would deploy 2 analysts and an engagement manager. They would take anywhere from 6 to 8 weeks to produce that gap report. It's also about 40-50 slides, right? So we tried to match that, but it's just done under a minute, and at the fraction of the cost. So the way we have to price AI agents is also very different. We have chosen to price it by outcome. So it's no longer by seats or by licenses, that kind of thing. So we also have to work with the procurement teams. Like, for example, CBRE has bought a bunch of our agents, right? And we have to work with the procurement team with a new type of contract, to be honest, with when we sell AI agents versus SaaS. So yeah, it's pretty cool, and it's very, very different. So the learning curve is quite steep. So I encourage anyone who has not paid a lot of attention to agentic AI to start doing so. I have all my reading lists. If you all want, just ping me on LinkedIn. Happy to share all that.
7 weeks to 1 minute sounds really exciting. And as we've all started to use AI more and more, I think we also have seen the flaws of AI, hallucinations, bias, data privacy issues. What sort of risks are there associated with using Unravel Carbon?
Yeah, for sure. But even humans make mistakes, right? So I think we shouldn't focus too much on the downsides of that, because it can be controlled. Okay, so hallucination can be controlled by how you design your knowledge graphs, how you fine tune that agent, and so on. In our case, we are of the belief that we must keep the human in the loop. The human is still the master user of AI. Okay, we cannot outsource everything to AI, right? So the human sets the intention, and the human accepts the suggestion made by the agents. But in that process, you really save a lot of time, you know? You get back your quality of life, you can go and watch Brad Pitt in F1 movie. Like, you can do a lot more because you relinquish the more mundane and menial repetitive tasks or deep analytical tasks to these agents.
And when we're talking about risk, I feel like we can't really go any further and not mention Trump. How has the election in the US changed your business? What have clients been telling you? What impact has there been?
Yeah, I've actually made the unconventional move to the US this year. I have spent 5 of the 6 first months of the year in the Bay Area to expand Unravel Carbon there. So this year we opened in Japan and US, in addition to Australia and Singapore offices. And everyone was like, why are you going to the US? You know, Trump is this, that. But to me, he is one individual. It is a single presidency. It is a very powerful presidency. But if you take, for example, California is the world's 5th largest GDP. And California dislikes Trump, and Trump dislikes California, if I can say that, but maybe off the record. But California has gone on to push 2 climate bills ahead. Okay, federally, there is a pushback. We cannot rely on anything of the current administration because they don't even believe climate change is real. How can you argue with that, you know? So federally, if SEC had pushed the climate mandates ahead, we would have seen 11,000 companies being mandated to disclose, okay, scope 1 to 3 and so on. Without that, California has gone ahead with SB 253, SB 261, and SB 219. These mandates are mandating 6,000 companies. Yes, it is slightly more than half only of the full, but it's still a significant number. So any company more than $1 billion in revenue doing business with California, not just incorporated in California, doing business with California, are all, will have to comply to this. So that's our focus, and we work through partners to address this captive audience.
Can you tell us a little bit about your clients? Do you work directly with manufacturers and their chief sustainability officers, or is it consultants? Who uses you the most?
Yeah, so we work directly both with end clients, and we are industry agnostic. We only cannot serve pharmaceutical companies just because the data is very debatable. But every other sector we have clients in. And we also increasingly now, with our AI agents, enable consulting firms. So my focus personally, apart from, being the CEO and doing capital raising and leadership hiring, my focus is on partnerships. So right now, it's pretty cool how the AI agents have been received by some of the largest advisory companies in the world across our jurisdiction. So Q1 was horrendous this year. I don't know if everyone else faced that, but everyone paused, right? Just to see what's happening from the US side. But Q2, Q3, my team has never been busier, but only because we had pivoted to AI agents, and that is creating a lot of value and very quick value for our partners. So these are, the big 4, the advisory firms, the audit firms. They are the ones who are embracing the use of AI agents, but the end clients as well.
And in your experience, what has been the main motivator for clients to decarbonize? Is it investor pressure, consumer pressure, regulation?
Yeah, I would say it's 80-20. 80% are still compliance driven, and 20% are voluntary driven. They just think it makes business sense, attract better talent, can sell better, and so on. We definitely want that to switch as we get closer to 2050. But if compliance can change behavior, for now, we'll take it, right? And don't forget that IFRS, US GAAP, the accounting, financial accounting mandates are only 30, 40 years old. So when it comes to non-financial metrics and GHG, these are much newer, right? 10, 20 years. And it's only right now that we hope to see that mainstreaming of behavior. So in any new S-curve, in any new sector, if it's quite common that it's compliance driven and served by consulting firms at the start, and then we'll see how that change.
We're almost out of time. I just have one last question. You founded companies before, but what's been different or harder about founding a climate startup?
Do I have a whole conference for this now? No, I just think that it's very different in each geography. I think the purchasing behavior of climate technologies is very funky, you know? Like, it's not very structured. Are we selling to the CSO, the CFO, the CIO, the CTO, or the investor relations, you know? Sometimes it's even the CMO. So it's still very filled with froth, but I believe it will eventually become a CSO and a CFO topic, right? So we can't wait for the buying cycle and behavior to be a bit more structured and a bit more clear as basically the sector professionalizes, right? So in short, it is unclear sometimes who the buyer is, and that affects sales cycles and things like that, right? And also the sense of urgency can only be created from the top. So without that buy-in, it's very difficult, right? So yeah, how do you spot that all at the start?
Great, thank you. It's been great to hear about your startup experience. We could talk for longer, but time's up. Thank you very much for joining us today.
Thanks, guys.
Please welcome to the stage Bloomberg's Aaron Clark, Cheryl Lee, Ishika Mukherjee, and David Stringer.
Well, thank you very much. I hope it's been an engaging day and some good sessions and a lot to chew over. I'm really glad to be joined by three of my colleagues from Bloomberg News. And the idea is we will give you a bit of an insight into the things that we're looking at, the things that are exciting and interesting us. And of course, one big topic on our mind, and no doubt a lot of your minds, is COP30. Not just the cost of the accommodation or where people are going to find somewhere to sleep, but also the topics on the agenda. Quite clearly, there's a lot of hard work to go in before that summit in November. Just recently, the UN's climate chief, Simon Steele, said, he couldn't sugarcoat it. They've got to go faster, further, and fairer to get things on track for what is, as we all know, a real pivotal point of the year for the climate sector. I'm most interested, I'm going to take a liberty here as the moderator and tell you what's interesting me first, and then we'll come to you. I must say as well, we are very, very interested to hear your questions. So we will hit briefly on the things that we're interested in, but hopefully you have questions for us, because hopefully we can hear from you too. I'm quite interested in the climate finance question. Clearly, in Baku, in Azerbaijan last year, that was absolutely pivotal. The $300 billion that was pledged to be mobilized, to be provided by 2035, I guess that's already suffering from two problems. On one hand, it's seen as inadequate by much of the developing world, and on the other hand, it's not really clear if and how that's deliverable anymore. The Brazil COP presidency have a real desire to try and push that forward. They are gunning to get commitments that tip us closer to a 1.3 trillion figure. I'm fascinated to see how the discussions play out in November. I think at the Bonn meeting recently, the sort of midway point, the sort of, I guess, fork in the road on the way to COP, there were about 116 proposals put forward for what might work. So clearly, not a lot of consensus, a lot of ideas, but not a lot of action. And so for me, that remains a really crucial topic. Aaron, I'm going to come to you, and I guess one thing all of us have been looking at, not just for COP, but for quite a while this year, is the nationally determined contributions, those 2035 climate goals. Lots of nations didn't get their homework in on time, in the February deadline. Singapore did, so congratulations to anyone in the room who was involved in that. I mean, what are we looking for? Are we expecting a wave of new national pledges?
Well, I think that's the hope, David. So less than 30 countries have submitted their NDCs so far. The original deadline was February 10th. Of the major economies that have submitted, the UK, the US, Canada, Brazil, and Japan, I think, according to Bloomberg NEF, we work with those people quite closely. Only Brazil and the UK, their plans really align with this net zero scenario that BNEF has mapped out. Other countries, the US and Canada, it's closer, but it's not true alignment with that trajectory. And of course, Japan doesn't align with that at all. I think going forward, what people are really looking for, they're looking for China and India's and the EU's NDCs. I think there's a lot of questions around India and how ambitious they're going to be. I think there's been a lot of talk that India may tie its how ambitious it is to the degree to which it can get financing, transition financing. So I think those are some of the things that people are going to be looking at going forward. And the new deadline, what everyone is pushing for at the UN is September submissions ahead of COP.
And we're expecting a big push even from the Secretary General himself.
Yeah, I mean, I think people are hoping that at least 100 countries submit NDCs by September.
If I can come to Cheryl, but just before I do, we do have 2 polls. And so it'd be great if we could pull up the first question and just allow people to use the QR code to begin to submit their answers. We'll come back to the results and talk more about it after Cheryl fills us in on some of the things that she's looking for as we head towards the Belém session. I mean, one thing I'm interested in is some of the other ideas that Brazil's put out there. There are lots of them. It's talked a lot about the hopes of launching a fund to protect tropical forests. Is that progressing well? Is it of a big size? What do we know?
Yeah, so really interesting, David. I think it ties in a lot to the question that was posed earlier about how we can get from 300 billion to 1.3 trillion in climate finance. So I think Brazil's great hope is that this instrument that they are proposing will work and will help towards that. It's called a Tropical Forest Forever Facility, and what they plan is to have a $125 billion fund. The idea is that it's going to be blended, so we have a mix of public capital and countries that hopefully provide guarantees and loans at lower rates, and then you mix it with private and institutional capital to make that $125 billion. So what they hope is that of this money, they invest it in some sovereign bonds or corporate bonds from emerging markets. And then because of the difference between the borrowing costs and the returns made, they can then use the difference to channel it into forest conservation. So it's a really, really interesting mechanism. I think really innovative. I think the jury is still out as to whether the countries that they have approached do want to invest in it to kickstart it off, and whether it goes some way into helping forest conservation. So I think one thing that we're looking forward is to see how it would affect how we look at nature and natural capital and price that. Because for conserving under this fund, if you have a hectare of forest preserve, you get $4 every year as a country. And so, I mean, for Brazil, there's huge incentive here because of all the rainforest it has, and it could stand to have $860 million a year from this fund if it works. So I think we're really anticipating and looking as to whether countries do want to contribute to it and how the mechanism would be put in place, whether other countries would have access to it in addition to Brazil. So that's what we're looking at.
I mean, that sounds like there's potential for a tangible, real outcome. What our polling results are telling us is that within the room, there's skepticism about other outcomes. As we can see, more than half of you who've responded are pretty pessimistic. And not surprisingly, I guess, we've seen a lot of conjecture, a lot of promises, particularly since the Glasgow COP that haven't necessarily delivered. And I guess we're also at a moment where there are question marks over the degree of leadership. The US has often been there at COP to often play the role as the bad cop. Unintended pun. But who fulfills that role? Who will be the one who's really driving the different groupings together to try and get some outcomes, and outcomes that can stick? So I'm not surprised to see that degree of skepticism. We will come back with another poll, so you're not done yet. Talking of disappointments, a perennial one has been adaptation and adaptation funding, but we're definitely seeing it much more on the agenda, bigger focus. As we mentioned at Bonn, at the recent sort of talks, there was, I think, a sort of discussion that whittled down 9,000 potential metrics to assess progress to just 490. So clearly some progress to go to decide on how to judge this, let alone fund it. I mean, what are we seeing in the adaptation space, Ishika?
Yeah, I think for COP, the biggest deliverable is going to be whittling that number down from 490 to 100 metrics for being able to track adaptation finance. The biggest question mark we hear is money. How are they going to track money, which is kind of the most important. So if that's delivered, that's going to be great. I was just at the global regulation deep dive earlier today, and there was a discussion about how we need regulation of adaptation as well on a country level, besides the national adaptation plan, right? How are regulators going to look at it? And I think if we have that deliverable out of COP, which talks about metrics, targets, that's a good starting point for then everyone to go away, all the countries to go away and start working on that. And we've seen adaptation coming up more and more amongst investors. I mean, when you have regulators, when you have metrics, chances are you're going to bring in more investors, right? It's a better regulated, better tracked space. So it can only be good. Of course, everyone can question whether over-regulation is good. But I think in adaptation, it's good because we don't have anything yet.
Quite. I guess one of the other things that we look for and are interested in, particularly when we're covering and our colleagues are covering COP events, are the people. And we saw some pretty interesting, always interesting characters, but we saw some very interesting examples in Baku. Whether that's India's government advisor, Chandi Rana, who's, if you recall, was very, very agitated at the end of the 2 weeks of negotiations and called out the summit conclusions as an optical illusion, certainly sort of really emphasizing that anger within the developing world and skepticism about the ability of developed countries to honor their commitments on financing. I'll come back in a moment to Chandi in India, but I wanted to come to Aaron. Aaron, you were in Busan for yet another set of UN talks on the hopes of a plastics treaty. But you had a chance to see and hear from Juan Carlos Monterrey, the Panama special representative, and who's certainly been an active, interesting character, that we've observed in these UN forums. I mean, what did you make of him, and sort of what are we expecting to see from him and from Panama at Bellum?
Yeah, so Juan Carlos Monterrey Gomez is, I think he's one of the most important sort of climate diplomats today. He grew up in a rural village in Panama. At 23 years old, he was the youngest head of delegation at the Paris Agreement. And now he's the special representative for Panama. Like you said, David, I met him in South Korea late last year, and he is a larger than life character, and he's an electric speaker. I mean, I met him. He's walking the hallways, shaking people's hands. He's equally eloquent and aggressive. He wears a traditional straw hat. And he's just a force of nature within these talks. One thing that he's trying to do right now, which I think is really important and really interesting, is that so many of the conventions are sort of fragmented, right? We've got the main COP, the climate COP. We've got a convention on desertification. We've got one on biodiversity. And so one of his main efforts is to try to unify a reporting mechanism for all the major environmental and climate conventions. And so that's one thing that he's pushing for. But I do think he's going to be, a force within climate negotiations for many decades to come.
Oh, that's fascinating. Before I come to you, Ishika, because I wanted to hear about some of your recent experiences in Delhi, we do have another poll, as I said, and so if we can put the poll up, and we'll come back and have a look at your responses there. So as you decide about Asia's role in COP, as we said last time, Chandi Rana, the Indian advisor, was a really vocal participant in Baku. Ishika, you recently were in Delhi, spending some time and working there. Had a chance to talk to some people around the climate space and get a sense of how India is feeling about the upcoming talks and its sort of climate position. What was your sense? Is it a positive story in India about progress? Is it a story still of frustration?
Yeah, I think the latter. I think it's a story of frustration to do with international negotiations, but it's a positive story in terms of how the domestic laws and regulations are going, where they're going when it comes to ESG. Chandni is a larger-than-life character as well. I think she really trusts the idea that the global south has to have a voice. The low and middle-income countries have to have a voice at the table of international negotiations. She said 300 billion is an optical illusion, and I think that's pretty much going to be, you've seen India hasn't even filed the NDC, right? And I think that's kind of them sending a signal as well that they're not happy with the way things have gone with climate finance. And we have no idea whether they're going to file it by September. There's been nothing out of the government yet. And I think that's kind of the tone they're going to take to COP this year, where they say, we want to see where the Baku to Belém roadmap leaves us with in terms of that $1.3 trillion. We want to see whether the Sharm el-Sheikh dialogue brings in more money for coal-dependent nations. They want money to come into nascent technologies like green hydrogen. They're getting money from foreign investors for solar and wind, for example, but these are established technologies. There's enough of a domestic base for them. They want to see richer nations give them more money for things where where India doesn't have enough capital. So I think that's what they're going to go to COP with. What's helping India now is what I said on regulations. They're developing rules around carbon markets. They're developing rules around sustainable finance, though the draft taxonomy was not as detailed, I would say, as some other countries, such as Australia. But they're starting to get the ducks in a row to be able to attract foreign investments. So hopefully, they can work together with everyone in the room at COP and not have another optical illusion moment.
No, that's fascinating. That's interesting. And interesting also the results that we see of the polling. If we can bring those up, quite a spread of opinion. Champion of practical solutions. I mean, I guess that's something I'd love to hear more about, actually, in terms of what Asia can show to the rest of the world. And quite interesting there, all of you, I guess, expecting that there has to be a role for government, and that we can't simply rely on and depend on private capital to step in. If we do have any audience questions, I think it'd be great to start to tackle some of those. Excellent.
Hello.
So we do have a mic.
Yes,
right down
you
there.
do. Hi, everybody. You guys have a question about tariffs, and given the fact that the world has rightly been preoccupied with them since they're such an immediate effect, how many years do you think this has set the net zero agenda back?
Wow, that's
one for you, David.
Difficult to say. I mean, what I can say, and what we heard and listened to just this morning, we had very lucky to have a session on tariffs and heard from people like Mary Leong, the former Canada trade minister, and I guess the conversation there was like to paraphrase the chilling effect that tariffs are having on investment decisions, full stop, and therefore. The impact of that is that investments into decarbonisation are also being hampered, and of course the overall effect is to slow down efforts at reducing emissions and to slow down the energy transition. So, to quantify how many years, I guess it's difficult, but clearly the impact is negative. I think the other interesting point is this is not just a US tariffs story. We've certainly seen, particularly developing countries, really bristle at some of the mechanisms like CBAM in the EU. Tariffs and the trade agenda and trade nationalism is certainly it's on the agenda for climate diplomats and negotiators who'll be heading to COP, and it feels like a really tangible, important topic to grasp. Anyone else with thoughts on tariffs?
I mean, I can share another tariff impact. It's not about net zero, but I remember when Liberation Day happened. I was talking to private equity and private credit funds, and they were expecting, and I'd love to know from the room, from the audience, they were expecting a wave of take-private deals across the globe in the clean energy sector because, of course, stock market valuations had plunged, which has slightly changed now. But they would get a discount, and it's easier to rejig supply chains away from the public eye. So they felt like a lot of investors wanted to look out for companies in the clean energy sector. We're tracking it, not sure how much that's played out yet because there's also so much uncertainty with tariffs, so people don't want to jump the gun, right? But yeah, that's another impact we're seeing.
Do we have any more questions?
Oh, yes, you do.
We do. Excellent.
I'm going to put you on the spot again. Which country in Southeast Asia do you think has made the most progress on ESG, and which one still has the furthest to go? We're naming names.
I think our residents of Southeast Asia can take that. Cheryl, do you want to take it first?
Maybe we'll go with the laggards first. I hope no one is in the audience from Indonesia. So I think one of the reasons why is because of the political instability. So with the change in administration, there's been a lot of disruption to business plans. So for instance, in the green space, right, there had been hopes that Indonesia would drive flows into the carbon market, being such a country endowed with rainforests. But I think what has happened with all this administrative back and forth changing of rules is that project developers for carbon on the ground have been really hampered, and they don't really want to invest anymore. And I think another area we're watching closely for Indonesia has also been the energy transition away from coal-fired power plants into hopefully more renewables. And I think like one big area everyone was watching were these JETP, Just Energy Transition Partnership programs, in which they are supposed to get some funding and then like phase down coal power plants ahead of schedule and cut emissions. But that deal has really stalled. Of course, this is not all to say that that is Indonesia's problem. I think there have also been really thorny negotiations with other countries, and the issue of whether developed nations are keen and they have the appetite to be funding these in the changed environment now. So I think on those ends, in terms of like what could have been a positive in green development, carbon markets, and also in the coal space, which is such a big contribution to emissions, I would say that Indonesia and the political instability have really disappointed some watching this space. And maybe like one of my team members would like to continue on a more positive note, who has made the most progress.
Ishika, as someone who's also Singapore-based.
Thanks, Cheryl. Okay, because I'm supposed to look at regulations, I'll be biased here and say Singapore. I know there are many problems, there are many things that the country can do better, but within Southeast Asia, to me, it's a leader in terms of developing a climate finance hub, developing regulations around it, trying to work with the region. I mean, its own contribution to global emissions is minimal, right? But it's trying to figure out a way to reduce emissions across this region with traction, with FAST-P, all those acronyms that you have. So yeah, Singapore for me.
I'm based in Melbourne in Australia, and so a little bit removed from the region, but the conversations that I have, talking to people very focused on whether it's financing in the climate space or renewables projects development, they're very effusive in their praise of policy in places like the Philippines, in Malaysia. Those are suggested to me as places that are really starting to get their settings right. And additionally, I think we're seeing, I hesitate to say, but Vietnam, it may be turning a corner. There's been lots of hope and optimism that they would get their sort of energy settings right for a long time. But I think we're beginning to see some progress, and that's reflected in some of the investment decisions we've seen into Vietnam recently, and certainly executives who have manufacturing facilities, people who are, dealing with the practical realities of climate change and climate policy on the ground there, are beginning to talk in a much more positive sense about Vietnam. So I'll offer those. Aaron, I mean, unless obviously based in Japan, so you feel free to and duck the question if you like.
I might dodge the question on Southeast Asia. I think from a Japan perspective, I mean, I think their transition is quite a bit different than many countries, although it's similar in some ways because they're dependent on oil and gas, like many countries here. But Japan's transition plan, which, as I mentioned earlier, is doesn't really align with the Bloomberg NEF net zero transition, is highly reliant on co-firing coal and gas plants with ammonia and hydrogen, and so a lot of that is technology that's not commercial at this point, and as well as CCS and carbon capture and storage. So a lot of those things, there's a lot of questions to still answer about Japan's transition pathway, I think.
And of course, in addition, quite interesting and innovative on the financing side as well. Like with Japan, we've seen sort of transition bonds and seen the development there. So there's equally active. Do we have any more questions? I do have, I don't know if we have a mic. I do have...
Well, actually, we need to wrap up because I think a few of you have a breakout to get to, David and Ishika. So we are going to wrap things up. If you have a final word at all, please go ahead.
We can take one final question, or okay.
If we can take one from the floor. Okay, absolutely, please.
Thank you. I have been working in the ESG industry for 15 years in Singapore. I'm from China. So I have two puzzles. For many years, we tried to convince China to embrace ESG. Now China becoming, increasingly love ESG. But meanwhile, the West, especially the US, is abandoning ESG. So how to convince China to continue to do this? And the second puzzle is that I see many companies who are doing ESG business themselves are not sustainable. Many bankrupted. So this is a question posed to our ESG guys. How to make your ESG business sustainable?
Right. Forgive me, just because we're short on time, I'll take the first part of that question. And I think essentially it was about sort of China leadership. And I think that's really apt. We just saw in Beijing, a summit between EU leaders and China, and a real commitment there that China will step up. As we said, China's NDC we're expecting before COP, and what we've heard from President Xi is that will be genuinely ambitious and sort of set the tone, not only, I guess, for government, but also for businesses across China. And as he said, that will be economy-wide, involved, not just be carbon dioxide, but it will be targeted at all greenhouse gases. And so I think the expectation is, if that's ambitious, it can really set the tone for China, but also show China as an example of leadership. So hopefully that addresses some of your question. I think that's it for time. I want to thank my panelists, Ishika, Cheryl, Aaron. Thank you all for your questions and for your responses on the poll. Thank you very much.
Thank you, guys. And just a few quick words from me before I know we race over to all of these breakouts. Thanks to all of our speakers and moderators for a wonderful program today, and thanks to all of you for being such great audience members. I would also like to take a moment to thank our summit sponsors,
Summit advisor, Bangkok Bank, our presenting sponsor, Schneider Electric, and our supporting sponsor, of course, Fraser's Property. This is the last stop in our Summer of Sustainability tour. We are off to our green fall. We are going to be doing Bloomberg Green programming in New York during New York Climate Action Week at the tail of the UN General Assembly on September 25th. We will also be at COP this year, or in Sao Paulo, I should say, because I'm not sure how many of us are going to be able to get to Bellum, and that will be on November 4th. So if you are interested in attending any of these events, or if you have colleagues who might be interested, please go to bloomberglive.com/calendar, and we hope to see you there. And now to the aforementioned breakouts. David and Ishika are going to be over in Clover 5 for the debrief with Bloomberg Green. If you're pre-registered for that, make your way back there. And then I will be doing climate scenario planning in Clover 6, back over this way. So I hope to see you all there if you've registered. Thank you again for a wonderful Bloomberg Sustainable Business Summit.